Our proprietary algorithms here at Clever Markets are showing us that the TTF, NBP, German Power, Brent, and JKM are all set to move higher in the week starting 23rd of March 2026. So even if we do see the occasional red candle that might be setting us up for a peak, we will still maintain a bullish view. Hello everyone, my name is Marcello Kolax. I'm the Managing Director here at Clever Markets, and today we are going to have a look at the European energy markets for the week ahead. Yes, a lot of our in-house algos are showing unprecedented strength with last week's move higher on the back of an escalating war in Iran, and the outlook does remain bullish for this week. So we are not too worried about the occasional red candle. Our view remains bullish. So let's have a look at the details. First things first, everything you see here, of course, is not trading advice and not an invitation to trading. It is just my humble personal opinions. So this is the TTF sentiment benchmark as of this Monday morning. So you can see the bullish percentage has increased by quite a bit from 58.6 towards 65%. So the majority of the market remains firmly bullish, with 20% of the market remaining bearish. And this overall bullish stance is reflected in the charts, in the proprietary algos, and of course in the classic TA as well. So let's get started with the TTF front month. As always, we are always recommending that we are starting with the market regime. So for our clients, it is on the regime index tab on the daily chart, where you can zoom in here and identify how strongly the market is trending. So right now we're in a dark, deep red. So that means the market is hot, hot, hot. So the market is strongly trending. If you're currently not a Clever Markets client, then you can keep an eye on the classic technical analysis tools like any sort of like momentum tool or trend tool. The steeper they are, the stronger the trend. So we are in a strongly trending market. The next question we answer is, are we trending up? Are we trending down? Let's get a little bit more detail. So here, zooming into the latest data from last Friday, we are starting this week at a state of 11. So what does this state actually mean? So in a trending market, a bull trend can usually go from 0 towards 20. And 20 means we have a strongly trending market. Anything between like plus and minus 5 simply means there is no clear direction. The market doesn't really know what it's doing. Between plus and minus 10, that means we've got an okay weak trend going on. Anything beyond that towards the 20 means that we've got a good strong trend going on. So let's add a little bit more detail. So here we are seeing one of our in-house algos called the probability distribution of forecast states. Don't worry, you don't have to turn to a quant trader to understand what's going on here. This is simply the character of the TTF front month. And you can see that bear trends, just intuitively by looking at it, like higher bars simply means that this forecast state is hit more often. What on earth does that mean? So here we see that the bullish forecast states only go until 15, but the bearish forecast states go until minus 17. So this shows us that on average, over the past 3 years at least, the downtrends are a little bit stronger and a little bit longer on the TTF front month, and the bull trends are a little bit shorter and they don't extend that far overall. So with us being at 11, we are slowly coming to an end. So probably until like 13 before we see a drop off is possible. So we are slowly edging towards the end of an uptrend, but there is still some fuel left in the tank as of now. Now let's have a look at the forward returns. What on earth is this? So here we see a box plot, and simply a box plot above the green line means we're expecting positive returns in the next 8 sessions. And if the box plot is below the green line, that means we are expecting negative returns in the next 8 sessions. And the box plots themselves, they simply show us where the probability is. So with us being at 11, you can see we are in a very small box plot here. So that means like the probabilities are quite tightly stacked. There's a small range of variability only. And the further we move along, the more of the box plots we start seeing to accumulate below the green line. So that means the further this up leg continues, the more likely a bearish reversal is. But you're not quite there yet. And this here right now looks like a coin toss to me, because the 50th percentile is just directly more or less on the green line, tiny body as well. So it could go either way. Now, this overall looks pretty toppy, doesn't it? But context is required. As we said, the regime index is extremely bullish, almost unprecedented. That means that there is a greater chance for the bull trend to continue towards the 14-15 area. So let's put all this information together. The TTF front month is strongly trending. It is nearing the area where a normal bull trend usually reverses. But because we are trending so strong, there's a greater chance for us to continue from the state of +11 towards +15. So there's still some room left for growth. So what we do now is we keep monitoring the state every single day. And once we hit 15, and this is not a linear distribution, so it doesn't go 11, 12, 13, 14, 15. It can go from +11 to +15 within a day. Yeah? So that it doesn't move linearly. But once we hit the 15, we can say with greater certainty that now we probably have reached a peak. And we can say all of this without ever having looked at the chart itself. So now let's go away from our proprietary algo signal layer and let's have a look at the technical analysis itself. This is the application layer in our Clever Markets methodology. So let's have a quick look. This is where we landed last Friday. The market gapped higher on Thursday. We saw a decline, another day of decline. So what's next? Well, let's have a look at the momentum first. We see that the MACD, our momentum tool of choice, is still pointing higher. Okay, still looking bullish to me. What is the trend tool saying? So we see that the 8 and 12 exponential moving averages are still on average pointing higher, still looking bullish. We are also still getting this flow of higher highs and higher lows overall. Yes, we did get a little bit lower, but we are still well above this trough here at 45.44. So in theory, the flow of higher highs and higher lows is maintained for now. The only thing that's a little bit worrying is the stochastic. So you can see the stochastic, our oscillator of choice, has kind of topped out here and here and here, which is a reflection of the market move right here and here and here. We haven't made a new high in quite some time since like the 3rd of March. I want to say this kind of more or less all the same area in the 66, 70. I know it's a really broad range area, that sort of deal. But because the market is still so strongly trending in accordance with our algos, we expect a move above the 69.5, possibly towards the 83, 84, and even the 90 isn't all that crazy anymore. Now, these moves can happen from one day to another. And trust me, I'm feeling for you. This can happen. It's crazy times. So in order to make more informed decisions, let's have a look at the hourly chart, because here we are not trying to just guess the next giant candle. Here we are actually trying to go with the flow. So what do I expect for Monday morning? First things first. Yes, we have come off and we have found support at the 61.8% FIB retracement. What was this based on? We have the trough down here near 50, and we have the peak up here at 74. And from this peak, the market has declined 61%, 61.8% of this preceding up leg. Yes, we do have this giant gap, and it does make it difficult, and some people might choose to not even draw on these fibs. Perfectly fine as well. We are going with it because most of the market seems to be looking at the same level that we are looking at. So why not put it on to get an idea of what your industry peers are looking at? So if we get a move below the 58.88, which is the 61.8% FIB retracement, then we can potentially fill this entire gap. So this could go either towards the 56.38, or if you want to have like the real gap fill, maybe 55.08. Both of these are possible. But somewhere in this area, we expect the market to find support and push higher. We would, in a first instance, go back towards the 69.5, because zooming out, we are in this rectangle. Can you see? This was the range we previously pointed out on the daily chart. So we might hit this again. And if you are familiar with technical analysis or with our content here at Clever Markets, you might be noticing, this would mean we are starting to make higher troughs and we are no longer hitting the rectangle support. So that makes it more likely eventually test and eventually break above this rectangle, because the market isn't even willing to move up down here again anymore. So this bullish rectangle setup on the hourly chart, combined with reasonably bullish tools on the daily chart, combined with a strong bullish sentiment on our Clever Markets benchmark, combined with our proprietary algo signals that do show a strong trending market, all things are set up for bullish continuation at the start of this week. Now, when are we wrong? And we really need to nail this one down. Well, we know that the uptrend will be at least delayed if we start pushing below this support area here that we pointed out, the 56.38, 55.08 support area, because then our alternative scenario will play out and we'll probably decline towards the 49, 45 area again, trying to find support within the rectangle. And then the bears still wouldn't be in charge. It would only mean that the market is more likely to flow sideways a little bit longer. So a bearish start into the week doesn't mean the bears are in control. It simply means we are more likely to swing sideways overall. Pretty cool, right? And before we move on to the German power markets, I do have a free gift for you, and that is the Clever Markets Masterclass on combining technical analysis with your existing fundamental models. We are now operating in a market environment where you no longer can only look at the fundamentals like weather forecasts, storage fullness, GASCO maintenances. Everything right now is being overwritten with just the latest Iran news. And it has become increasingly difficult to make good decisions, both for speculative traders and for physical buyers and hedgers. So scan the QR code to get free access to the masterclass. Link is in the description below. Now let's have a look at the German power front year. So here on our Clever Markets dashboard, we are on the German power tab, we are on the daily chart, we have selected the regime index, and here we see the exact same thing. The trend has become a darker shade of red, so that simply means the market is red hot. The trend, whatever it might be, we'll look at that in a second, is accelerating. Now, let's have a look at our proprietary trend indicator. Here we are seeing that we are at a state of plus 12. The day before, we are also at a state of plus 12, and the day before that, it was at 10. So it's like Wednesday, Thursday, Friday last week. So what does that mean? So once again, the German power frontier market has its own characteristics here. Once again, here we are seeing that on average, the downtrends tend to be a lot stronger and longer lasting than the uptrends. Based off of this, we write, during trending regimes, which is the case right now, moderate bull trends have a high tendency to revert from +8 onwards, resulting in typically short bull trends. All right, so just looking at that, we would be getting ready to start looking out for some reversal setups. Now, let's have a look at the statistics. Here we are going to our box plot again. We are at a, what did I say, plus 12. So you can see we're just slightly below zero. So there is a slight chance for negative returns within the next 8 sessions. It is not set in stone, there's only a slight chance. But can you see as we progress? Well, first of all, we don't have as much data anymore because the market rarely moves this far. But the chances of negative returns within the next 8 sessions increases as the bull trend continues. However, as you have seen, we are in unprecedented times with the regime index going crazy. So with such a strong trend, there is a chance that we are reaching into these less often seen bullish states. And isn't that fascinating? Without having looked at any chart so far, we already get a super good idea of what the market might be doing. And now if you're a speculative trader or a physical trader, start making decisions. On the speculative side, with such a strong bull trend, you might be looking for more buying opportunities. However, you are still very sensitive. You're not as concerned about the occasional red candle because you see that the trend is strong and more likely to continue. Once we do reach a state of plus 14, plus 15, maybe even 13, you will become more sensitive of potential reversal candle patterns that could ring in an end to the uptrend. If you're on the physical side, sorry, sucks to be you, the market is more likely to continue higher in the next couple of days. Depending on when you have to look in the next tranche or whatever your mandate is, if you still have some time left, then we might want to sit this one out because the market can still go much, much higher, but we do expect a reversal as we are starting to approach 14 and 15. Cool, right? So now let's have a look at the charts. Here on the daily chart, we see that we were already within this ascending channel. So the market was bullish overall, marginally so, but still bullish. And we have now broken above this. So this means that the bull trend is accelerating. We are now moving higher, faster. The most important resistance level I'm looking at right now is 104, which is the peak that was hit on the 9th of March. Looking at the classic momentum tools, at the stochastic, at the ADX and DMIs, moving averages, all looks like it could move higher still. However, we are not oblivious to any quick market changes. So as soon as we start moving below 96.15, which is this gap boundary here from the 19th of March, you would say, hey, maybe we will see an extended corrective move, maybe towards the 89.65. Once we are here, we'll need to see what happens, probably best observed on the hourly chart. But for now, we are working with crystal clear support and resistance levels that will either confirm our bullish stance or deny it. Now, this isn't really tradable on the daily chart, so let's have a look at the hourly chart. So we have been working for quite some time with this descending channel, and we broke higher quite violently and immediately formed an ascending triangle over the sessions from last Thursday and Friday. And ascending triangles, on average, are believed to continue higher eventually. That is simply because the market is willing to buy at higher and higher and higher prices. So here, although the stochastic and the MACD and the moving averages have started to top out, we still expect the market to eventually continue higher simply because of what the higher level chart, so the daily chart, is showing us. It is still implying eventual upside continuation. Also, if we are in an ascending triangle where the price is moving into an increasingly tighter range, we don't really look at MACD and oscillators and moving averages, especially not in such tight ranges, because they are bound to move sideways. So this is just a function of how they're calculated. But with the daily chart as a backdrop, we still think eventual upside continuation is most likely. So the bull trend would be confirmed above 100 euros, and the bears would be given a chance to drop lower below the 98.67 towards the 93.15. All right, now let's have a look at the EUAs. Here, once again, we are starting with the regime index, and I want to quickly walk you through it. So if you're an existing Clever Markets dashboard client, this will be super helpful for you. If you're yourself just getting started with algo trading or systematic trading, then at least the concepts we are conveying here should still be super interesting for you. And if you're ready to make the move, just get in touch with us to get this for yourself. So let's have a look. We are zooming in on the regime index for the EUAs, and we see that the market hasn't been trending for the longest time, since 9th of March, essentially. We just barely started to trend on the 19th of March, and then by the 20th of March, the market was not trending anymore. So currently, not trending as of this Monday morning. So let's keep this in mind. We'll analyze this in just a second. Give me a moment. So now we're looking at the trend indicator, because you're wondering, so we were briefly trending, but now not anymore? What's going on? So let's have a look here. As you remember, UAs, they recently broke below this sideways range, and we saw that the downtrend started to pick up. So we went from a state from minus 13, 14, 15, 16, and now back all the way to minus 7. What on earth does that mean? So right now, it is just a bullish correction to an underlying bear trend. And I just want to show you how this works out. We hit a couple of sessions ago minus 16, and the move higher was completely anticipated. Because look at this. Here, this is the nature of the EUAs. And you can see we reverted higher at minus 16, and it doesn't really go much further than minus 17. So we are saying that, however, strong bear trends nearly always rebound sharply higher once they reach minus 17. So we were already set up for a bounce. And look at this. This is our expected forward 8-day return probabilities. You can see most of the box plot at minus 16 is above the green line. And then, of course, 17, which was never hit, is all the way above the green line. So we are expecting a bullish reversal, at least a little bit. This text here is not, or what the expectations for the markets, they're not updated every day. We update this once a year because the character of the market rarely changes. So this is a reliable reflection of what the market tends to do. So right now we are bouncing higher. And the market at the current state of, what did I say, minus 7 is currently not trending. So as you remember, right now, we are in a sideways trend as of last Friday. So what does that mean? Because in a sideways trend, the up legs and the down legs are a little bit shorter. And you can see this here. There's like this steep drop off. So that means these market states are rarely hit. So probably around like minus 9. And then we start seeing the steep drop off to minus 10. Usually, on average, the down legs in a sideways market, they only go until minus 9. And we are already at minus 7. So with all this information, let's have a look at the daily chart and put everything together. Remember, we were not trending according to our algos for quite some time. Remember all the gray dots? exactly reflected in the chart itself with this rectangle. Then at some point, we started trending lower. Remember, minus 13, minus 14, 15, minus 16? This is exactly that. Here we hit minus 16 and we expected the market to bounce even before it happened. This is exactly what happened last Friday. So we are, since we are not trending, expecting a reversion to the mean. So maybe a few more gains on Monday morning, and then the downtrend has a good chance to continue lower. Why do we think that the market could move towards 70 or like 69.8? How come? Well, this is the 61.8% Fib retracement of this Fibonacci retracement with the 100 up here and the 0 down there. Move higher towards the 61.8. This is usually how far it goes. So maybe we get like one more green session on Monday. But overall, as long as we remain below this, the bears will likely continue lower. Only if we get a daily close above the 70 mark, then could we make it towards the 74.5. Because past this level, there's not much more in the way directly towards 74.5. Once again, here, as you can see, we are dealing with just one or two big green candles. This here in itself is a bullish setup. It is a bullish engulfing candle pattern, which was confirmed by a bullish stochastic signal, but we don't expect a lot of gains here, to be completely honest. So let's make this tradable, but on the hourly chart. So here we are ingesting a little bit more detail into the chart, right? Here we have this rectangle that we mentioned earlier. Here we do have this down leg, which can now be captured in a descending channel. We broke above it last week before we came off a little bit. Right now, we do expect the market to find more support here, maybe a marginally stronger open on Monday morning, but eventually we are about to continue lower. And you can see the preferred case and the alternative case, they are both eventually still just pointing lower. The only question is, do we get a bounce this morning or not? And that is all for the EUAs. Now, the last market that we want to look at is Brent, considering what's happening in the world. So here we see that last Friday we had like a deep red state. The market is strongly trending. Now let's combine this with the trend indicator. Here we have reached a state of plus 17 last Friday, and it has stayed on this state for 1, 2, 3 sessions. Before that was 16. This is unusual. We are in an extremely strong trend because we are writing that bull trends have a high tendency to revert between plus 7 and plus 14, between plus 7 and plus 14. So this is usually when we see the market revert. Right now, we are all the way here. So this is a strong trend and it is more likely to continue. And we know that because according to our box plot forward 8-day returns, we are firmly above the green line. But what we can expect is returns of, what is this? Maybe 3 or 4% returns, positive returns within the next 8 sessions are still expected. So the bull trend for now is continuing. How do we combine this with our charts? So right now we have found resistance at 112.88, and there's a good chance that we'll continue above this. Next is the 120. That was the last hit on the 9th of March, but there is an okay chance for us to move even beyond this with the classic momentum, trend, and oscillator tools showing us continued upside. But let's have a look at the hourly chart first to see how the Monday morning might be opening. So you can see we have topped out last Friday and we did get a bearish stochastic signal. And we also saw that the MACD isn't all that strongly bullish. So we have topped out at least a little bit. So yeah, on Monday morning, we do expect a marginal return towards the 104 level, but we are quite likely to find support here. Buying interest should set in before the bulls continue. You can see this support level is an ascending, broadening wedge that is simply showing overall the market is moving higher, but the bulls and the bears have both longer and longer up legs and down legs, with both sides being equally convinced. And this makes sense with a constant flow of headlines breaking throughout the sessions that both sides might be equally convinced. So for now, we do expect a weak open before we continue higher. I hope you found this to be a valuable preparation for the week ahead. If you want to learn how to combine your existing fundamentals with technical analysis, check out the free masterclass that I've put together. Everyone, have a good start into the week, stay safe in the markets, and bye-bye.